down every single task you do every day, whether that's eating, sleeping, working on your computer, whatever you're doing for however long time, put it down, because then you can go back and see where you're going wrong, right? And if it's different for any other day of the week, let's say your Saturdays are different from Mondays, write it down, right? I would say the second step is to plan out your income streams themselves. So now you have an idea as to what sort of income streams you want to build, right? So you want to go about doing the actual action steps, because the thing that holds back so many people from actually achieving what it is they want to achieve, and maximizing the sort of productivity that they can, maximize, is the fact that they haven't written out and figured out the exact action steps. Think about it. What's holding you back from going from zero to hero? It's the fact that you don't have the bridge, and the bridge is the action steps, right? So you want to figure out the exact action steps it would take to achieve the goals that you want to achieve, right? So that leads into number 3. The step number 3, I would say, is figure out the exact goal of each income stream. All right. How much money do you want to bring in? How much time do you want to allocate to each of these things every single day, every hour, every week, every month? How much time are you willing to put in? And how much of an effort, risk, money, and time are you willing to sacrifice and invest into each of these income streams, right? And you want to know also, before you get into like figuring out, what sort of income stream you want to build, you want to also figure out, not educate yourself about the 7 types of income streams. All right. So I'll say it right now. There's number 1, earned income. So that's income you get from a working job, right? You get paid that sort of earned income like a salary. Number 2 is profit income. So you buy and sell things. I've experienced this myself. I used to buy and sell things all the time when I was in the 8th grade, 7th grade, middle school. I used to buy and sell candy all the time. Now, people do this on a larger scale, like on eBay and Amazon and things like that. But you want to figure out what sort of income stream is the income stream you're going after, right? There's the third one, interest income, which is income you get from lending money. There's number 4, residual income, when you continue to get paid after the work is done. There's number 5, dividend income. I'm sure some of the speakers on here today are going to be speaking about dividends and things like that. You get income from owning a stock, right? Rental income, you get income from renting out a house, right? Capital gains, assets from increasing in value. And there's actually an 8th. All right, and that's royalty income, income you get from, other people for using your idea, right? So you want to figure out, where does your income stream, what do you want to build? Where does it line up in one of those 8, right? All right. Then the 4th thing I would focus on is, after you've planned out your days, planned out your weeks, how you are able to, spend your time already, then you've planned out your income streams, the exact steps to get there, how much money, time, and effort and risk you're going to allocate to each of these things. Then you want to focus on, I want to say this from the get-go, you want to focus on only 1 to 2 income streams at a time, max. The reason is, if you go out there and try to build 7 income streams all in 1 month, it's not going to happen. I mean, anything is possible, right? But it's very unlikely. So you want to make sure you're focusing one at a time and building it solid. One quote that I really, really always heard since the beginning on this side of Twitter is, you want to make sure you get it running like a river. All right. You want to make sure it's flowing like a river. One income stream is like, you want to think of this like building a foundation, right? If you build a sturdy foundation, then you can go on to the next level, the next step, the next, floor of the whatever house you're building, right? You need a sturdy foundation. So, get the first income stream running and flowing like a river, and then build the next one, kind of like building a foundation. All right. And especially when you're first getting started, do not focus on all 7 income streams, 5 income streams. No, focus on one at a time, solidifying it and using each other to leverage. Let's say you're building a business and you have a 9 to 5, right? Use that 9 to 5. You might say, I don't have time. Use that 9 to 5 that you're spending your 8 hours a day at work. Use that 9 to 5, the money you're earning, to allocate and put into the business that you're building online. Boom. Right there, you're using those 8 hours. You are leveraging those 8 hours for your second income stream, right? So it is so powerful when you do that. Number 5, you want to eliminate distractions and maximize your work. So that means extra unnecessary projects, delete them, like get them out, right? And you want to maximize your work time and productivity, whatever that might be for you, whether that's getting better sleep, working out more, whatever it may be, you have no idea. Like, the way your body functions and the way your mind functions is all correlated with each other. You want to make sure that you're healthy enough to actually go about your work and not burn out, right? So avoid burnouts, focus on working in short but intense time periods. So that's called work blocks. You want to make sure that the work blocks you're setting out for yourself. Let's say you have 5 hours a day you want to spend on working. Within those 5 hours you might have like 20-minute work blocks where you work your ass off for 20 minutes, then you get a 5-minute break. 20 minutes, 5-minute break, right? There's things like that. Just go with what works for you, eliminate distractions, maximize your work. And the sixth one, the last one, is just take action, right? You can go so much harder. The concept that always keeps me going when it comes to productivity, like if I ever feel like I'm not going hard enough and I always feel like I can be doing more, I just tell myself, like, yo, you can go so much harder than you're going right now. And it just avoid burnout though. Like, do not feel the need to like push yourself past what you know could be your limit, but always know that, especially if you're first getting started, you can go much harder than you're going right now. Like, so avoid burnout. Remember to live. Like, don't just chase your if we spend our whole life chasing, that's where the issues come up. Like, if you think about it, what are we always chasing for? That's also something when it comes to entrepreneurship. Seems like we're always chasing, right? You don't want to do that. You want to feel as if you already have everything you want. If you want to earn six figures, just say you're already a six-figure earner and time is catching up and you attract it with the work you're doing, right? Don't always feel like you're chasing. Remember to live a little, all right? That's what entrepreneurship is all about, is that freedom. So if you don't have that sense of freedom, even from the get-go, just make sure you're focusing on time for yourself, time for what's important for you, and really just living, because that's what entrepreneurship is really all about, right? Like, I personally make sure I'm always not just working my ass off all the time, right? I'm working smart, not working hard. You want to be able to do that. That's what entrepreneurship is all about, is working smart over working hard. So yeah, that's essentially all about how can someone manage their time while building several income streams at once. I wouldn't say build several income streams at once, right? Build one or two at a time and then build the foundation and go up from there. Make sure you're maximizing your productivity, you're planning everything out, and just take action. It's all about taking action on your action steps. So yeah, I'd say that's essentially it. And if you are an aspiring entrepreneur, someone who's going out there to build these income streams, you got this. All right. It might be rocky at first, but it's like that for everyone. You might see these successful ass entrepreneurs, but just know that they took the time to actually do all these things, plan it out, and take action. And they've gone through the trials and tribulations that you're yet to go through. So never compare your journey. And yeah, sending all positive vibes to all of you that have some sort of goal when it comes to entrepreneurship and building these income streams.
Wow. I wish the audience could clap because that deserves a round of applause, to be honest.
That was
And
wow.
honestly, I'm yeah, from my speakers. I am glad. Baby. Yeah, I'm very glad that we have that recorded, because
Great
next time I want to run through a brick wall, I'm just gonna listen to that one back. Yeah, honestly, listen, y'all. Can you guys imagine, guys and girls, imagine like how powerful Nitty's gonna be when I'm 22. Like, she's 16. She's gonna be freaking running the world. I cannot wait. I am glad to be a part of your community. If anybody's not a part of Nitty's community yet, you should go and follow her. That's the good news, is like, I'll say to all my speakers, they get limited time tonight, right? They're getting like 7-8 minutes. But you can have them for much longer if you just go and join their communities. That's what I would say. So hats off to you. Incredible passion, story, and knowledge, to be honest. And I appreciate you sharing it with us. So moving right up.
Thank you so much.
Sorry.
Seriously, thank you.
Yeah, of course. Oh, one thing I will say real quick to everyone.
Mm-hmm. Go ahead.
One thing I will say real quick to everybody is, as y'all know, sometimes spaces is finicky and they tend to, crash and things along those lines. If this space does crash, Dividend Hero, who was a speaker up here, and first off, Dividend Hero, this was his idea, was this space. He came to me, was like, yo, like, what if we put together a financial literacy space? We've been doing Zoom calls for weeks now, collaborating on this. We worked together to put together this panel. I mean, Dividend Hero is a huge part of this community as well, doing so much. We've been on Zooms till like 10 p.m., just getting questions together, organizing things, doing the graphic work and everything along those lines. So if this does crash, he will create a space, and we'll go to his space. I found out though that some of my spaces have been crashing because my CEO, who shares this account, has been logging into my to the Wolf account and going onto spaces while I'm running them and freaking crashing my spaces. So I found that out today. But I don't think that's going to happen again. So hopefully we'll keep moving. And also, shout out to my favorite Palti, who's back in the crowd. Love having you with us. Moving on to the next speaker, we have Caitlin Cook at DeadCaitBounce. I'm very glad I learned what a dead cat bounce was because of her name. It's a fun topic. And Kate, you're going to be talking about some crypto, some intro to crypto. You have a new job in that area, so it's very cool. I would love to hear from you. So the floor is yours.
Yeah, hi everyone. Thank you for having me. I don't know how I can possibly follow up um, the last speaker, but I'm going to try. So I'll be talking about crypto, basically just an intro to crypto, and with just such quick information flow pretty much every hour of every day, especially if you're on Twitter, which we all are. It's just really easy to get sucked into trends. Crypto, especially, everyone's been talking about it. So crypto assets, NFTs, they all seem really sexy investing topics right now. They're controversial. They're the greatest thing people have ever seen. They're the worst thing people have ever seen all at the same time. And it's just so back and forth. Regardless of that, regardless of your opinion on it, I'm a huge proponent of education. I recently started with a fintech startup providing an educational platform and the ability to buy and sell for financial advisors, for RIAs who don't really have access to that right now. So kind of helping on the education front there. And we've all probably invested in things that we wouldn't necessarily be able to explain backwards and forwards. We're not always experts. It's pretty impossible to be that way in every aspect of life. But, we do speculate sometimes. But in a space like decentralized finance, which is just an entirely different beast from traditional investment vehicles. And I say that having worked for a traditional global asset manager in my previous role, just an entirely different wheelhouse that we're in with crypto. And if you're looking to make this a dedicated allocation within your portfolio. I'm not a trader at all, so I can't really speak to that aspect if you're, looking a little bit more short term or speculating. But you want to be comfortable regardless of what you're doing, especially, if you are looking to make this more of a long-term thing. But yeah, so do believe that education should always be the base. So for those who might have a knowledge base kind of above this, I apologize. It might seem a little bit elementary, but I do think that base knowledge is the most important thing to kind of build on top of. So hopefully this is helpful to some of you. And if you want to understand crypto assets, NFTs, anything in that world, you need to understand what a blockchain is first. That is the interstate that everything else runs on top of: tokens, coins, NFTs, everything. Blockchains would be the interstate. Those other things would be cars kind of traveling on top of that and using it to go to where they want to. And in simple terms, a blockchain is just a digital ledger. If you've ever balanced a checkbook, that should resonate with you. Just recording transaction details, seeing where money's been, in this case, money for the most part, and then seeing how it's changed hands over time. And it is a distributed ledger. So unlike, if you had a checkbook for yourself that you manage privately, any and all changes or transactions on a digital ledger are automatically synced and shared publicly. Anyone with internet connection can access them. You or I could pull them up and get updated data to the past few minutes, just seeing the latest transactions. And blocks themselves, just elementary again, but blocks list transaction records as they occur, time order. When a block reaches what's called capacity, a new block is chained to the previous one, and it lists the transactions that immediately follow. So hence why it's called a blockchain, just blocks chained together. It could go into perpetuity, essentially just going on forever as transactions happen, hypothetically. So they're very scalable. And then, they're public open blockchains like Bitcoin. There's different kinds, and there's kind of a lot of different rabbit holes that you can go down, which is why I wanted to keep this so basic, just because once you get bit by the crypto bug, there's a lot of different ways you can go with it. There's public and private blockchains, there's open and closed and permissionless, and just a whole bunch of different ways that you can go and dig into things. But keeping it with sort of more the basic terms, went through blockchain. Obviously, it's a ledger. Tokens and coins are different things. If anyone ever wants to talk about any of these things, obviously more than welcome to message me. I'm happy to talk through any of them. But a lot of the main ones, I mean, you've seen a lot of people talking about different coins. I mean, Dogecoin is kind of one that a lot of people have been talking about recently. I'm more kind of on the Bitcoin and Ethereum side of things. There's a lot of different ones that you can look at. But one of the questions that I did get was the best and safest way to start on cryptocurrencies as a novice. So, and I'm going to take that from two different angles. One, from an education standpoint, because again, really important to kind of know what you're talking about in this new space. It is very, very different. And from investing, where should you be buying, cryptocurrencies? And there's a lot of different ways that you can do it. But I'll speak to some of the more basic ones. From an education standpoint, there are a lot of different tools out there, but some websites that I do really like, in addition to, the main custodians that I'll mention that all have educational resources. CoinMarketCap is a really good website with a lot of different resources and producing research. Masari Pro, I hopefully I said that right, but that's another one with just a wealth of data and different resources to pull from there that you can use. They have free versions as well, both of those, so would highly recommend. And then I guess just if you're trying to buy crypto, there are a lot of different ways you can go. There's different types of storage. You could just directly have a digital wallet for yourself and buy and sell directly. For most people, you're probably going to want to use qualified custodians. So just Gemini or Binance, and just there's a whole bunch of them. But those are two of the bigger ones that I would maybe start with. And that they kind of enable a much easier buying and selling than if you were to buy it yourself. And you might hear some of the pushbacks on crypto being that you could lose your password to get into your crypto wallet and then you lose it all, or you hear the stories about people having millions of dollars in crypto and they can't get it back because they forget their password. So I kind of recommend, if you're starting out, probably going through one of those main custodians like that, just to keep them simple. I think even Robinhood might have the ability to buy and sell that now, which I don't use Robinhood, sorry, but I do think that that's another one too. But again, just going back, on the education front, kind of putting a plug because I know we have a cap on time here. Since I am kind of newer in the space as well, I've been sort of tracking my journey via Twitter with a really just comprehensive thread on decentralized finance in general. As I go through different things, I'm kind of documenting what people need to know, what the basics are, keeping it in simple terms as much as possible. So if you don't follow me, that's another resource as well. Just kind of a little bit off the cuff, if you're scrolling through Twitter, that's there. And if anyone else has any other questions, feel free to DM me, but I will pass it back for the next speaker.
Appreciate that. Kate, thank you for, I feel like you gave a really nice basis there. And I think that covering the blockchain is a great way to start out. It's kind of like when you're talking about stocks, right? The first thing that people should understand is, what does it mean that I'm buying a public share of a company when they're buying? And that's kind of when I'm buying crypto. What does it mean that I'm buying a crypto? And that kind of comes to the blockchain. So that was a great basis for it. And like you said, like we're all going to say tonight, we're giving you a taste of these fantastic speakers' content. And if you want the full thing, go for it. It's free, and you can choose to be educated, right? Financial literacy in this day and age is all about the willpower. The resources are unlimited. Many of them are free. Many of them are extremely affordable as well. And it's just the choosing to go after them. So I hope that you all do choose to go after them. And without further ado, let's move on to our next speaker, which is going to be Max Lucas. So Max, floor is yours. And Max is going to be speaking on.
Hey there, you guys hear me?
Yes, sir.
Alrighty, yeah, so I will be talking about housing. I actually got my degree in petroleum engineering and then moved actually into housing in 2020 due to COVID. So I normally talk about stocks on my Twitter, but this opportunity allowed me to talk about housing, which is now my day job. So I'm excited to talk about housing, how you can get a house with a limited amount of time. I'm mostly just going to be talking about how you get a loan and what the credit market kind of would be like there, and self-employed income and how that pertains to housing, especially getting loans during COVID. Self-employed income has been challenging for a lot of people. The restrictions around it and how we calculate income is different than how you would calculate for a W-2 employee. And I know a lot of us on Twitter do have some sort of self-employed income. So being able to calculate that effectively when you're looking to get a home is important. So just to start out here with income. So how we use income to get a loan, to get a home loan, would be DTI, and that's debt to income ratio. So these are the standards for Fannie and Freddie Mac, or Fannie Mac and Freddie Mae. We need 43% debt to income ratio, and you can't go above that to qualify typically. Now, during COVID times, they were able to raise that to about 45%, but that's just a kind of a one-time deal that'll go away here eventually. Unfortunately, I know a lot of people due to COVID saw their income change dramatically, and they did change rules a bit to help with that, but it's still, some of these rules are still set in stone. And unfortunately, I can tell you what the rules are today, but the markets for home loans are a little bit different than, when I was going to school in petroleum engineering to learn about physics and math, which are set in stone, right? Newton created it, and it's going to be that way for the rest of history. But home loans, especially controlled by the government, can change between administrations. Back in March, it was changing day to day. So I will give you what they currently are, but if you want more up-to-date rules, or if you're really looking to get a home loan, I would go to a bank you have a relationship with, or you can even just message me on Twitter here, and I'll get back to you on specific questions. But yeah, so we want a debt to income ratio of 43%. So what that means is if you make $10,000 a month between you and your spouse, or just you, we're going to take that $10,000 and we can use 43% of that income. So, or we can use 43% of your debt has to add up to, or your debt has to add up to 43% of that income. So if we take your student loans, your home loans, any other home loans you have, car loans, any type of credit card debt, that all has to add up to only $4,300 for you to qualify for a loan. If it goes above that, during right now, we could still qualify you, but during typical times, you would not be able to qualify. Now, getting into debt and credit, I know a lot of people on here talk about good types of credit to have, how to avoid credit card debt, how to avoid all sorts of types of debt, paying off homes early, paying off cars early, things like that. And that's great. Not having debt is awesome, really helps with your financial stability. But as far as pulling credit and us being able to qualify you for a loan, we actually need you to have some sort of debt or some sort of lines of credit to qualify. So we usually tell people you need 3 open lines of credit. So that could be 2 credit cards or a credit card, current home loan, and an auto loan or something like that, so that we can qualify you. Because if you don't have any lines of credit open, you can have a 0 credit score, which is an actual thing. It's possible. And if you have a 0 credit score, we have no way of saying if you're a good borrower or not. Even though you don't have any debt, I have no way of saying if you're able to pay back debt or not. So we need you to have some sort of open lines of credit. And on those credit cards, you want to stay under 25% of the credit limit. If you go above that 25%, that's going to ding your credit. And that's going to give you a little better or a little worse rate on there. So moving down to down payment now. So a lot of people want to put that 20% down, and that's totally understandable, because if you don't put 20% down, you're going to need MI, or mortgage insurance. And what mortgage insurance is insurance for the bank that if you default, we have mortgage insurance that pays back that difference. Now, as the borrower, you don't want to pay that because you're paying for insurance that you don't have a benefit for. And I completely understand that, but the other side to paying mortgage insurance is that 20% is a lot of money to put down on a house. On a, everyone here can do simple math. On a $500,000 house, it's $100,000. And if the market keeps going up as fast as it's currently going up, or even slows down to, let's say, an 8% clip, which is still pretty intense, but it would be less than it currently is, just trying to get 20% while the price of homes keeps going up is hard to do, because you're constantly looking for a higher and higher number to put down. So if you want, you can get a home loan for as little as 3% down. Now, the more you can put down, the better. And I would caution most people, unless you just really can't do it, to put down at least 5%, because at 5%, you have a much better rate and a much better mortgage insurance quote than you would at 3%. Even though it's only 2% more, it makes a big difference. So for conventional, the minimum is 3%, but I would like 5%. And for FHA loans, which are possible too, but you do have mortgage insurance for the life of the loan, it's going to be 3.5%. And back to that on a conventional loan, remember that you have to pay mortgage insurance until the loan is 20% debt to equity. Now, the nice thing on that is if the market keeps appreciating as fast as it has been, that debt to equity ratio, the debt will be paying down and the equity will continue to increase because your home value has increased. So you could only pay down maybe 5% of the loan, but if the equity in the home has increased so much, because let's say the value went from $500,000 to $700,000, well, you just built $200,000 worth of equity without having to pay any of that. So those are kind of the three pillars I would say of home loans would be income, debt / credit, and down payment. So that's about all. Oh, and I did have a question on self-employed income. Now, there is no way I can get to all the intricacies of self-employed income in the small amount of time we have. But since I know a lot of people do have self-employed income, I will try to touch on a little bit of the highlights here. So typically for a business, we want 5 years of income to be able to document it without needing more information. If you have 5 years of income and can show a 5-year profit, we are able to just use a last year's tax return, which is really nice for any business owner. But if you don't, we need a 2-year profit and loss and tax returns, because that 2-year, we're going to be able to take a moving average of that 2-year to show what income we can use. Now, unfortunately, that does include 2020. So a lot of businesses saw a decline in 2020 from 2019. And we're only able to use the most conservative income, which means we have to use that 2020 income. So if you are a business owner who saw a decline in 2020, this was probably going to be a challenging time for you to get into a home, but know that unfortunately, as the rules currently state, we would have to use the most conservative income. We also going to need a year-to-date profit and loss. So every month, we're going to need a profit and loss statement. And that's just to make sure that the business is getting back on track. So even though we could see an increase from 2020 to year-to-date, we would still have to use that 2020. So that's only a little bit of the intricacies of self-employed. I would like to get into it more. Maybe one of these days we can do a Twitter space on housing as a topic in general, and then I can maybe get into a little bit more on how loans work for that. But right now, it's about all I got. So thanks, guys.
Thank you, Max. And I will definitely keep that in mind with a space for housing. I hope that everybody in the audience is taking your notes on your notepads, because some of this is really helpful information. And when you go to, buy a house or start a side hustle or earn some extra cash on the side, which we're most likely going to all do at some point, this is going to be really helpful to have. Now, one thing which I always try to do at the beginning and I forgot to do is, especially because I have some new people here who haven't been on spaces before, is we would love to get more of your audiences on. So if everybody could just take a moment to go ahead and share this space out, really easy to do. If you want to say some nice words above it, you don't have to. You can just share out the space. That will get a bunch more people in here. And you can do that to my new people by going onto spaces. So on the space, you pull it up, and then at the bottom right, there's a little share via tweet button. And then you can share that out, and you can say join up or whatever you want to say. And that'll get a bunch more people in here, and that would be awesome. But not that we don't have a great crowd in here already. And thank you to everybody who's here. Love the Wolfpack, love the people who are coming and putting in time and effort into bettering themselves and increasing their financial literacy, because that's what it's all about. And that's what's going to benefit us all long term. So thank you, Max, for that. And I'm going to move right into our next speaker, which is going to be DecadeInvestor, one of my OGs. I actually did a little pod with DecadeInvestor, interviewing him about his background in investing and getting to know him a little bit better. So that's up on my Spotify. Oh, and also, if you like Twitter Spaces, I record and post Twitter Spaces onto my YouTube. It's pretty much just solely Twitter Spaces. So that's my pinned tweet right now, and also my Spotify. And I'm going to start putting them on my Spotify at the request of the audience, because some people just find it really easy to listen on Spotify rather than having YouTube. So whatever your preference is, I'm going to try to cater that content to you. So without further ado, DecadeInvestor, who will be talking about side hustles, among other things.
Hey, what's up, everybody? So I'm DecadeInvestor. My name is Colin, but my account is obviously DecadeInvestor. First off, I just want to say, Wolf and the team, Ross, Dividend Hero, this is awesome. I know a couple of the speakers already, but a couple of speakers I don't know. Super cool to hear different perspectives and get this free, right? Everyone loves free. This free information on, real estate, investing, crypto, entrepreneurship, from a future, in my eyes, freaking powerhouse of a person, already is and continue to will be as needy. But man, this is really, really awesome thing that you guys have going on here. So yeah, I'm talking about investing, hence my name, DecadeInvestor, and then a little bit about side hustles. I want to briefly just kind of talk about with what Caitlin had said earlier with education, so stock investing, whatnot. And I opened up an E-Trade account, and some of my older investors that have been in it for a couple years are going to know this, but I was paying $6.95, I believe, a trade with E-Trade. That's $6.95 in and $6.95 out. So there's $13-14 right off of your investment with fees just to invest. But I went in there with $400 and I paid. I bought $100 worth of like $96, whatever it was, worth of 4 different companies. Ended up losing a lot of that money. Only one of those companies went up. The other 3 individual companies went down. I did exactly 0 research on those companies. I just kind of saw them on an article. Someone told me about them, and I just kind of just bought them. So it kind of goes back to education being, the cornerstone of financial literacy and just personal finance, right? You have to have education. Doesn't matter if you're doing real estate, crypto, stocks, side hustles, everything just about education, right? You got to have that foundation first. I said this in the podcast with Wolf, but imagine a tree that has no roots, right? It's going to fall over in the winds. But when you have a tree that has a lot of a big root system, doesn't matter what it faces, it'll stand tall. So that it goes with our finances, all around, whether it be real estate, crypto, investing in the stock market, whatever it is. So I failed, right? I lost that money, and I came back and I did some research, and I realized that index funds, ETFs, were successful and worked for a lot of successful, wealthy people. So I quickly transitioned over to index funds, ETFs, and that's why I hold about 80% of my investments. I have about 16, 18, 20% fluctuates around individual stocks, and then I have about a 1.5% in crypto. Still just really recent with that because, like Caitlin said, I wasn't educated on crypto, and I didn't want to just jump in with the hype and not really know. So I did some research, and I currently only hold some Bitcoin, but we'll see how that goes here in the future. But that's really what I want to talk about with investing is just the education is the biggest thing, right? On my page, I talk every day about investing, decade investor. So long-term mindset, but it starts with the education. I get a lot of DMs saying, what should I invest in? Which is great, right? You're thinking about it. But it should also be, why am I investing? What should I invest in? And then it's usually followed by tell me what to invest in, not, how can I research this stock? How can I research this fund? So the biggest thing is, that education when it comes to investing in real estate, right? I'm about to start looking, or currently am looking for duplexes to house hack and whatnot. And
I'll get you a loan.
Yeah, see, look, I was glad I was after Max so I could listen to him, and he had some good information on that, because if you go into a blind, right, yeah, there's that potential to make the money or to be successful at it, but there's also that potential, that risk of things going south, and that's not what you want with your money or your life. So, and then side hustles, with side hustles, the biggest thing, and kind of the first speaker was talking about it, but it's just like, don't worry about getting a bunch of side hustles. Rather focus on getting a couple side hustles that you can really beef up and maximize the income you're getting from them. They always say the average millionaire has 7 streams of income, which is true. But I guarantee a lot of those millionaires that have those streams of income, they didn't just go from one, like a 9 to 5, and then have 7 the next day, right? They built them up as they went, and things take time. You have to have that long-term mindset with side hustles. But with that, find out what you're passionate about, right? I'm super passionate about, if you can't tell, about personal finance and investing. So I started this Twitter page, just less than a year ago, really. I joined on Instagram, right, under the same name, and doing it there as well. And I've found ways to make money, to teach, to share what I love about personal finance and investing, because I'm passionate about it, right? You might not always be passionate about your 9 to 5. You might not be passionate about what you're doing right now. But if you start that side hustle today, yeah, it only might, you might start making only $100 a month, $200 a month. Heck, you might go with months without making any, money, but you stick with it, right? I didn't create this Twitter account July of last year, and then August of the next month I was making what I'm making now. No, it takes time to build it up. Things take time. So with side hustles, find out what you're passionate about and don't give up with it, right? You have to stick with it. I see Rio, he's listening down here. He does a lot of affiliate marketing, and I've just followed his journey, right? He didn't start making what he's making now when he first started. It takes time to build it up. So that's kind of my piece with side hustles is just, again, find what you're passionate about and stick with it. If you really love it, it doesn't matter if you're making $1 or $100 or $1,000 or 10 grand a month, whatever it is. That shouldn't matter because you're passionate about what you're actually doing. Money is the byproduct. So with that, I want to keep everyone safe with their time. I had a couple questions and I want to run through them because I have 3 and I want to make sure I get them all answered, but I don't want to spend too much time. So the first question is, what side hustles can I try out being on an H-1B visa? So to be completely honest, I didn't know what that was. So today I was researching and doing some research, and it seems that there's very minimal things you can do with being on this type of visa. But some I found, and whoever asked that question for in here, you can send me a message. I'll send you the article I found. But one is to invest, right? Stick your money that you earn from the visa that you're able to do. Take that income and invest it. The second thing is house hacking. So it's kind of leading me to that's kind of like similar to the third question. So I'll get in that in a second. And then the third thing is to rent out your car. So like there's apps like Turo where you're able to rent out your car if you're not using it. And those are legal ways under the H-1B visa that you can earn income. There are a couple more, but those are pretty decent ones that you can start with if you're able to. The second question is, how should I think about my 401k, especially if I plan to leave the U.S. in a couple of years? Can I not withdraw at the time of leaving? So yes, you can withdraw your 401k, your Roth IRA, any retirement account anytime you want, right? But the problem is if you do that, Roth IRA is special in a couple of occasions, but most of the time you're going to face income taxes on those withdrawals, plus you're going to pay a 10% penalty early withdrawal. There's a couple stipulations within that, like reasons why you can without that, but without the penalty. But that's just something to keep in mind. If you are, I guess it's hard to answer this question because there's a different ways of going about it. Are you a U.S. citizen and you wanted to go live in a different country? Are you not? Are you here on a visa or something and you don't know what your future's like if you're going to come back to the States, whatever it may be? So it's kind of hard to say what you want to do without getting a little bit more information. But my biggest thing is if you have the 401k and you're going to leave, but you're a U.S. citizen and you're just going to go live in a different country, you want to retire somewhere else, you can still have that 401k, that Roth IRA in the States and then withdraw it after retirement age, 59 and a half, without certain countries have the way to not pay taxes on that. Just depends on, different deals that countries have with taxes. So it just kind of depends. Like I said, I don't want to say a definitive answer of what it is. And then the final one here is living with a friend. So they asked, thinking of getting a roommate for some extra cash. Close friend is interested, but I'm worried about living with a friend. What are your thoughts? So to be honest, like I was saying, I'm actually looking to get a duplex to rent out one side and then live with a buddy on the other side that I've known for a couple of years. The biggest thing is just, they always say, the person that you live with, that whether you're a friend, you might end up not being a friend after. Definitely possible, but it's something where you have to ask yourself, like, do I feel comfortable living with this person? Do we mesh well? And at the end of the day, like, yeah, I guess it's personally, I feel comfortable doing it because I know my friend and we're cool and we've already lived together once, so it's not like anything. It's just you have to go in with the mindset of like, if we do this, there's a possibility, there's a chance, there's a risk involved that we could lose our friendship. Air quotes, lose your friendship over living together. So it's something you just have to. It's a person by person basis of getting a roommate for some extra cash is a great way to get that extra cash to maybe lower your rent or lower your mortgage, but don't discredit your friendship because of that extra $500, $600, $700, whatever it may be. So just kind of have to weigh the risk and reward of doing that yourself. So those are my 3 questions. That was my little spiel on investing. The biggest thing that you can take away with investing is educate yourself. That's what I do every day on my accounts is I share education. I want people to understand why they're investing, understand the ins and outs of investing, not just, hey, tell me what to buy, and then I'll say, then anyone could give you advice and that they could lead you down the wrong path. So yeah, you can ask, what do I want to buy? But also you have to have the ability and the education to do your own due diligence and search up that fund, search up that stock yourself. Then when it comes to side hustles, like I said, is just find what you're passionate about. If you're really passionate about it, then you shouldn't worry about the money, right? The money's a byproduct. If you can monetize it, awesome, right? If you can monetize it, great. If you can't, that's okay too. If you're really passionate about it, then it shouldn't matter if you monetize it or not, right? So that's what you got to ask yourself when it comes to side hustles. But that is it for me. Again, if y'all are here, this is some great information, great speakers, great to connect with some speakers that I haven't actually, to be completely honest, seen before on Twitter. So super cool here. And then also some other speakers that are some legends in the space as well. So Wolf, thanks. Wolf and Ross, Dividend Hero, thanks for putting this together. And excited to hear what the rest of the speakers have in store.
Absolutely, Decade. Always appreciate you. Always a good time chatting with you. Honestly, one of the first people on this platform who kind of took a chance on me and, hopped onto the Wolf app, link in my bio. And, I just appreciate you for all of that. And everything you just said is so true. And I liked how so me and Ross last night, we were divvying up some questions, and we saw these questions about like side hustles you can do on like certain visas. And we were like, we have no clue, but if we give it to Decade Investor, he'll probably go do the research. So we could count on you, and we were correct. So I'd love to see it. And also, I just want to take a moment and say thank you to everybody. I'm getting so much love in my DMs and in my comments right now from everybody that's saying that they appreciate this, that they love what we're doing here. And I want to thank y'all because it makes my day. And this is my full-time job, is doing this, is trying to provide content to the community, just, running the socials in addition to some other stuff for Wolf. And it makes it all worth it to have all the people that come to these things and chat with me every day. I get to Zoom with people every single day. So my mission is to educate, my demographic and really all the people that are on here. And to my speakers, you are helping me achieve this mission. And to my listeners, I'm going to continue to do everything in my power to provide value. I literally spend hours a day DMing people, trying to set up these spaces. I have probably another space tonight, and then 3 or 4 more spaces already set up this week. And then I'm already working on 2 for next week. Even though I'm moving next week, I'm setting up spaces during it. So I really just want to give my everything to this community. So I appreciate all the love back. So thank you for that. Moving on to our next speaker, very fun one, renowned on TikTok, making some of the best content out there, has a massive community on both there and here, and is just bringing some fun and some wit to the area of finance. So you know who I'm talking about. RobinhoodKid, the floor is yours.
Wow. That intro is a little intense, guys. I don't even know how to follow that intro with anything that I'm going to talk about. But real quick, I wanted to go back to Decade. Decade, you said your name was Colin, right?
Yes.
I'm curious. I'm curious as to do you remember what those 4 companies were and which 3 failed? And are you still holding on to the 4th one?
Yeah. So I remember 2 of the tickers. One was GNW, which is like Genworth Financial, I believe. And then another one was SSI, which was Stage Stores Incorporated. I think it was like a REIT. To be completely honest, it sounds really bad, but I don't hold any of them. I just sold them all off because I knew I was not being smart with that at all. And
oh gosh,
because like you could tell right now, I had no idea what it was. So me trying to explain it 6 years later, at 23, I don't know what the heck. I didn't know then. I still don't know now. I'm trying to forget that time in my life. No, I'm just kidding. But
it's helpful for me as a new investor to hear this.
Yeah, well, it's just one of those things where, like, it's, you always hear people saying, "Oh, my coworker, I was overheard him at lunch talking about XYZ," or my neighbor said XYZ, which is great. You can use that and listen to it, but you have to research. I didn't do the research part. I didn't do the research part, and that led me to not being successful in that endeavor there.
Oh my goodness. I feel like that's exactly what's all over TikTok right now, which is, the platform that I'm learning on. But genuinely, like when you mentioned the commissions, I just was like, I've lived, my trading career has lived in a time without commissions at all, with Robinhood and whatnot. So that's that's wild. But okay, I'll jump in, and I might as well just give a little background to my name, I guess, robinhoodkid, because it stirs up a little bit of conversation and controversy. But basically, the idea behind robinhoodkid, I started learning about investing back in November, actually. So I'm very, very new to this conversation. And I didn't invest a single dollar until January of 2021. So a very recent journey of mine. And Robinhood wasn't actually the first app that I downloaded. And the concept of it was, for those of you that are familiar with the term, I feel like Twitter is actually the one that taught me it, but boomer bears. The opposite of a boomer bear would be the Robinhood kid. It's the kid that might have gotten a stimulus check in the mail, or sees GameStop running up and just basically takes their money and throws it in the market and creates this bull market kind of that you're seeing. So it's a play on words. I have been running with it. And it's been, interesting, but that is the background of the name that kind of leads into what I have been doing. So I'm brand new to investing, like I said. And one thing that I want to talk about today, and I'll watch my time, but is basically just the financial conversation is really exclusive. It feels like an exclusive club. And when I first started talking to people about finance, they just would use words that they didn't even realize didn't make any sense. For example, I had a conversation with my dad, and he asked if I was bullish or bearish. And the words actually just smushed in my brain. I was like, am I mushy or mushy? Like, I had no idea what he was asking, And I think that's just one of those things that when you've been in finance for long enough, or when you've been around the conversation for long enough, those are the things that just should make sense to everyone, right? And so I was really grateful to have, back in November, jumped into a conversation that I had no background in. And I do have a background in theater and improv and whatnot. So it was really fun for me to be able to take, new ears, fresh ears to these concepts, like bullish and bearish, which is one obviously now that I understand, and just kind of put visuals to them or TikToks to them, and make it a little bit more understandable for the layperson. So that is my goal. One thing that I definitely want to talk about as well is just opening up that conversation. Especially what I want to touch on is, if you are someone who has been like in the finance industry for a very long time, and you don't have those fresh ears, things make sense to you. One thing that I always value is when people are willing to it's really uncomfortable as someone like myself to ask the question. It's embarrassing to ask the question and say, I don't know what that means. Will you please explain that to me? Or, just being willing to admit that I'm not included in the conversation was something that was hard for me. So, for you guys that are in the financial industry, or have been in it for a while, just to open up your ears a little bit too, and maybe change the language is something that I encourage you guys to do, and just make it a more welcoming conversation. And I've been able to do that because I have fresh ears, and I won't have them forever, but that's kind of part of the conversation that I've been trying to have. Someone also said on my TikTok last night, it was so funny, I went live and they were like, so you started in January and you think you can talk stocks? I was like, okay, so I have my encouragement for the people who've been in finance forever, but I also want the encouragement for the people that are jumping into it. Just to say, if you dedicate a little bit of time, well, the things that you put your mind to, it's amazing how much you'll learn if you just put a little bit of time each day. So to those that are, maybe just jumping into the conversation, and to the guy that said, you started in January and you think you can talk about this stuff, I'm like, yes, you know what? If I took a semester-long class at college, which I graduated with the university, I graduated with a degree in sociology. So again, not finance related, but for the classes that I did take in related to sociology, after a semester of learning, you should be relatively educated on the topic that you spent time learning. And I've been learning about this stuff for about a semester. So yeah, just the encouragement to keep pressing on, and to take the time to learn it, and things will start connecting. Yeah. And then the question that I got, which, oh, Gab, I'm so grateful that you think I can answer this one. But basically,
You're welcome.
The question was about diversification and what is everyone's preferred allocation mix between stocks and bonds and crypto at the moment. And as a learner, this is what I would say for myself. And then I almost want to throw it back to Colin or anyone else who wants to throw it into. because as a beginner, and having like a smaller portfolio, for example, my portfolio being between $1,000 to $3,000, diversification is possible with an account that size, but it definitely isn't down to explicit numbers. What I would say is the general concept of the idea for me is the more diversified you are, the less at risk you are when markets go in opposite directions, if that makes sense. So I think just being open to things like cryptocurrency, like what is it? My ETF, not my ETFs. Oh yes, my ETFs, the S&Ps down like crazy today, but then my crypto's up like crazy, and they just like balance each other out. So for me, it's a learning experience where, I'm putting a little bit in each basket and, being able to, I don't have a specific percentage. So again, not the best person to answer the question. But yeah, for the beginner and the beginner experience, if I'm answering in that way, I would just say, try, don't invest in something you don't know. So, don't invest in options if you don't know what it is. Don't diversify for the sake of diversifying if you're about to throw money into options. But once you're educated on something, dabble in it a little bit, and you can't boil the ocean all at once. So what I've been hearing from everyone else is just take time learning it, feel comfortable to take that time, and then step in from there.
Love to hear it. Now, I have a question for you because, kind of your claim to fame here is you take the 60-minute, lecture and you turn it into 60 seconds. So what's that process like? You go out, you find a topic, it's a complex topic, and you're like, all right, I'm going to turn this into 60 seconds. How does that work?
Oh gosh. Okay, so for example, I'm sitting, I've basically, for the past 2 weeks, I've been trying to turn the lecture on the 07-08 financial crisis into a 60-second TikTok video. So that's one that I've currently been working on. So I can tell you guys that these videos, sometimes they just come right to me. Like the bull and the bear video, that just made sense, right? Sometimes they just click and I can make a video. However, when I'm really trying to boil down a conversation like the 07-08 financial crisis, I sit down, I do hours of research. I literally just sit on, whether it's YouTube or Investopedia, most internet sources. I have conversations with people. And then I begin to think about things in that realm so right now I'm taking that and I'm like, how would a university student understand this? Or how would a kid understand this? Or what could you relate to that is similar to this, that in the 07-08 is probably the worst example because it is so complex. But basically just like, what do I do in my everyday life that is not related to mortgages in words that I don't understand, but is just related to things that I do understand? So just trying to boil that concept down into something that I do every single day and find connections. What I'll notice with all of my TikToks is they're not perfect because it's 60 seconds or less, but it gets you close enough to a term to be able to just grasp the further details. So yeah, even if it's like, okay, well, that's not I did an options video where it was like shopping and putting something on hold, right? And you have to pay a small fee to put that on hold. And everyone was like, well, not exactly, because the Greeks and the this. And I'm like, okay, awesome. Yes, exactly. But everyone goes shopping, right? For the most part. And most people know an experience of putting something on hold, not for a fee, but you can kind of relate it to that. So it's not meant to get you exactly to the concept as a whole, but it's meant to get you close enough to begin to understand and conceptualize it just a little differently.
Love to hear it. Thank you so much for coming on. Decade, you got something?
Yeah. Well, two things. Number one, robinhoodkid. I didn't catch your name if you said it, so my apologies. But
I didn't.
Ross,
I'm sorry. It's Kayla.
Okay, Kayla. So, Dividend Hero just tweeted you because he found one of my old tweets I put in August of 2020, showing you the 4 stock tickers that he just tagged you just like a couple minutes ago.
I love that. I'm gonna go check
so
it
you
out.
can go
I knew it was in there somewhere.
Wow, that is dedication.
It is dedication. I love it. I love it, Ross.
Well, yeah, me and Colin go way back. So.
Yeah, we have a little thing going on here that me and him are brothers.
Oh, sorry, I lost
if you're
you
in
guys.
here, you're gonna find out we're not brothers. But oh, can you hear me? Can you guys hear me?
Yeah, I got you now.
Okay, so with like the preferred allocation mix, I don't want to overstep, but I think it's something to to keep in mind, like everyone has a different answer, right? So like, Ross and I'm 23. Ross is 23 as well. Our preferred allocation mix is going to be different than someone who's 60, right? It's one of those things where it's a great question to ask, but it's also dependent upon your age, your time horizon, your risk tolerance, right? Like, because bonds are historically, and they are, less risky compared to stocks. Index funds, ETFs are less risky than individual stocks. Individual stocks are less risky, if you want to look at it this way, than crypto, right? And so it's one of those things where even within individual stocks, you have like Walmart's, and you have like IPOs that just come out that are penny stocks, right? So there's so much that falls in between. But because like I said, I'm 23. I know people that are also 23 that are 100% individual stocks in crypto, and that's all they do. I'm 80% ETFs, index funds, 20% individual stocks, a little bit of crypto. And I know some people that are 100%. Brendan is basically 100% index funds, ETFs, right? So everyone's gonna have a different answer. It's all about it's nothing wrong with asking, but then it comes down to doing your own research and finding out what works best for you, your risk tolerance, your time horizon, all these different things that can, that will help formulate your strategy, because it is, your strategy, which is your choice. So there's really no right or wrong answer with that. It's just one of those things where everyone has their own little deal, what they do and what they see fit and what they teach. And if that's what you teach and it works for you, then it works for you. But it doesn't mean that what I do, is any better or worse than someone else. It's just a matter of what we do, what we know works best for us.
I love that. Thank you for going back over that one.
Yeah, I wanted to piggyback on that real quick. So I worked wealth management for a little bit too. And one of the reasons I think people ask about bonds and stock allocations there is in wealth management, we're dealing with a different client entirely, right? So in wealth management, our client was staying rich, not getting rich. So most people on here are younger, early stage of investing. So bonds really aren't something they need to worry about much, just because those are typically uncorrelated assets with stock. So the idea there is that when stocks go down, bonds should go up, because that's a plea to safety. Now, crypto is a little bit different, because we're not exactly sure what that is correlated to, as far as will that go up or down with stocks, right? So in the last downturn here, crypto obviously took off, but that's yet to see what will happen in the next downturn. So anyway, that's just a little bit on why you might want to be with bonds. But for most of us here, 100% stock is fine, because you have so